So this is part 3 of this multi-part video series which I am making for my subscribers, students who want to only trade the weekly charts, who only want to take positional trades, who only want to get involved with stocks that are showing fundamental strength. In part 1, we looked at the weekly chart layout. So this is a weekly chart. We did the settings for this chart layout. We saved the chart. In part 2, we looked at the important factors to consider for every positional trader. Because as a positional trader, you are not going to sit in front of the computer or your laptop uh, continuously. You will only scan for stocks, plot your price levels, and when the price enters the buy zone or sell zone or stop loss, you will take action accordingly. And since it is a weekly chart, you don't need to sit there in front of your computer continuously watching the price movements, right? So this is a weekly time frame chart. In this video, which is part 3, we will look at how to set or draw the price levels. Now, if you go to MarketSmith website, there is a buying range, there is a selling range, and there is a stop loss range. Okay, let me explain what I'm saying here. So go to MarketSmith, then go to idea lists. Okay, product, go to support. Here, if I press Control F, yeah. So if I write range here, just write range. There will be a diagram. Wait, let me scroll down. See, yeah, this one. See, you see this dotted line is the pivot point. Okay. On the MarketSmith chart, they will give you the price at which you are supposed to buy the stock, which is the reason why in this video series, I am not discussing patterns like cup with handle, double bottom, flat base, ascending base, high tide flag, etc. You don't need to do that because if you have MarketSmith, they give you the price level, they give you the pivot point. Okay. So you really don't need to learn uh, patterns. You can read them in William O'Neill's book, but if it is given to you ready made, like half the job is done for you. So this green dotted line is the pivot point. Okay. Above the pivot point, you see this blue zone that is 5% above the pivot point. So that distance is 5%. That is the buying range. Then below this pivot point, you see this red zone. This is 5 to 8% below the this pivot point. Okay, that's the stop loss range. So when the price enters that zone, you might want to cut your position size. You might want to sell all your shares. See, it is written here buy range 5 to 8%, cut loss range 20 to 25% profit range. So when the stock breaks out, you buy when it is in the blue zone. When it enters the green zone, you sell. See, these are all weekly uh, bars. Okay, so you have enough time to sell the stock. Okay, see, this is 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11. See, that is 11 weeks. This is 3 months. This might look very small to you, but it's actually 3 months worth of data, is around 11 to 12 weeks. Correct. So on the weekly chart, as I told you, we are using the logarithmic scale because in a very short uh, space, lot of information is covered, lot of time is being covered. Okay, so we will have to plot these. We will use the same color code combination which William O'Neill is using so that there is no confusion. So we will plot these on this chart. Okay, so this is a cup with handle. Let me remove this. Okay, so this is a cup with handle. I think this is base number 1 or it is base number 1B. This is BHEL. And as per regulations, I am using the old charts to explain to you the concept. Okay, if you understand the concept, you can apply it on any weekly chart. If you learn how to drive a car, you can drive practically any car, right? As long as you know the basics. So this is a cup with handle, which you don't need to learn, but I will show you. So from here, what happened? Wait, I will select the highlighter. I will have to change the color. Wait, Control Z, Control Z. So like this, yes, nice cup with handle. Okay, and that is the pivot point, the high of this candle, high of that bar. Okay, I still say candle because I have studied advanced candlesticks, but bar chart is much more simpler. So the high of this candle is the handle of the cup with handle. So don't go into these pattern recognitions and all. Market Smith knows better. Okay, they know it better than you. So stick to what they have presented. Just focus on that green dotted line. So the high of this candle is 87.95. So what do? You draw that blue color band, which is the buying zone. How do you do that? You go here, rectangle, just draw this. Okay, just draw it like this. Double click here, go to coordinates. This is 87.95, and above this it will be 5%, right? So 87.95 multiplied by 1.05. So this is 92.34. So I'll write 92.34. Okay. Then you go to style. Style, you make it blue. Then here you make it 50%. Okay. Give it shading. Okay. Extend right, extend left. If you remove this, it will look like this. That is why you extend right, extend left. That's it. Just remember this price 87.95, because we need that price to calculate the stop loss range. Okay. Same thing, you just take this, copy paste here, take this down. Let's put the stop loss range coordinates. So what will be this one? This is 8% below the pivot point. Pivot point is 87.95, right? The high of this candle. So 8% below that. So which is 92% of 87.95 into 87.95. So 80.91. So this becomes 80.91. Then this is 5% below the pivot point. So 95% of 87.95, which is 83.55. 83.55. So that's the stop loss. Then the color that you will give is red color, and make sure it is 50% transparency. Okay. I click here. See, that's your stop loss range. That's your buying range. So when the price enters this zone, you start buying. Now, why do I say start buying? Why I don't say just buy? See, that's another story. That is a part of trade execution. I will come to that. So basically, when the price hits this zone, you don't buy all the shares at once. Let's say you want to buy 500 shares. So instead of buying 500, you start with half, like you start with 200 shares or 250 shares. Then wait, see whether the price sustains within that 5% band, because it's a pretty large band on the weekly chart, right? So wait for the price to go another 1 or 2% up. See whether volume is coming in or not. Then you buy another 100 shares. That becomes 350 shares. Then you buy another 50 shares. That's become 400 shares. And you buy gradually. But make sure all of your purchases are done within this band. Okay. Why do we buy gradually? Because once you buy and then the price starts coming down, you are stuck, right? So you start with a small position size. Okay. Decide the number of shares that you want to buy beforehand. Now let us draw the, let me do it like this. Let me copy paste this. Yeah. So let's draw the selling range. So this This will be 25% above the pivot point. So 1.25% multiplied by 87.95. So 109.93. I have a calculator here. Okay. 109.93. I'm practically calculating everything for you using this calculator. And this range, this will be 20% above the pivot point. So 1.20 multiplied by 87.95. That is 105.54. So 105.54. That's it. And the color will be green color. Make it green color, it's automatically 50%. Okay. So this is 5% range. This is also 5% range. Make sure this is logarithmic. Okay. And see, now you see this looks beautiful, right? See, in the weekly chart, we are not drawing that base, the green, blue, red, that colored base. That is applicable only on the daily time frame chart. Here we already have everything. We already know the pivot point. We now know the buying range. This is 5% away from the pivot point. We already know the stop loss range, which is 5 to 8% below the pivot point. We already know the selling range, which is 20 to 25% above that pivot point. Okay. Remember one thing, this 5 to 8% distance is from the pivot point. Okay. If your buying price is slightly higher, okay, than the pivot point, because it will be in the range. So whatever your average execution price, 5 to 8% below that, that becomes your stop loss range. Okay, just remember that. So you will have to make that adjustment while adjusting the trade. Okay. So if I continue this forward, have a look at this. What happens? It finally reaches the selling zone. Okay. I will continue this video I'll continue this part in the next video, because I think there is somebody at the door. I have to open that door. Okay. Take care.